Good evening, traders. Welcome to day 4 of our online Trading Waves course. I hope you are all enjoying the course up to this stage and you've had a wonderful day today. Okay, let's get started. Today is corrective structures. Let's go through the course content and see what we've done so far. Course content. We're still going to be using day 3 and day 3 to 5 notes, so you can keep those open. I believe everybody has got all the videos now. Everybody should have all the videos from 1 up to day 3. Okay, so let's go to course content. We've done introduction to Forex on day 1, Fibonacci theory and the harmonic patterns on day 2. Yesterday we did 2 types of motive waves, that is the impulse and the diagonals. Went through the basic rules and all the rules and guidelines of all the waves from 1 up to 5, and then A, B, C correction. And we also covered the rules of leading and ending diagonals and where we find leading and ending diagonals. Today's corrective structures. So we're going to be looking at the 5 corrective structures. It's only 5, guys, only 5. And if you understand them correctly and you're able to identify them correctly, you should be halfway there. And we're going to look at them individually, and we're going to look at them in combinations of doubles and triples. Truncation we already discussed. Then there's alternation. Then there's alternation, and there is divergence. We're going to discuss this today or tomorrow. So let's see how far we go today, and but I'm sure we will be able to cover all of this today. So let's go with corrective structures. On Monday, so tomorrow we don't have a course, so we're going to resume Monday with the strategy. So this is the strategy. How do you take the trade? So far we only learning the Elliot wave theory, which is the forecasting tool, but the actual trading strategy is on day 5, and that's where we're going to learn how to take the trades, put in stop losses, and put in take profit levels, and do a bit of real market analysis there. Okay, so let's start. Let's go to the notes. Day 6, 7, 8 is practicals. We're just going to be doing practicals. Naked chart all the way up until we get a trade. 9 and 10, you watch them 2 seminars on your own. That is the stock and RSI seminar that's incorporated with the day 5 strategy, as well as market correlation. All right, let's go to our theory notes. We're going to corrective structures. All right, so we're going to look at corrective structures. As I said, it's 5 corrective structures, so we're going to go through them. We're going to look at their characteristics and behavior and their Fibonacci levels. Okay, so we're going to start with the simplest one that we've been looking at up to this stage. So we're going to look at the zigzag. I'm going to move my notes to the side. I'll be reading the rules as I'm constructing it. So let's get this one blank chart here. Okay, let's get the same chart we used yesterday. So you can get a blank chart here. This is the DAX, okay? But anyway. Right, so we're looking at a zigzag. Let's read the rules of a zigzag. Simple as this, we just read the rules and we construct. Okay, so let's start with a zigzag. It says a zigzag is always a 3-wave structure. So what I'm going to do is I'm going to construct all of these corrective structures in one channel. I'm going to do it in one channel so it can be easy to understand. Let's do it like this. All right, let's go full screen. Okay, let's start with the zigzag. We're going to use the yellow color. So with the zigzag, Let's make it thick. Let's make it thick. All right. So a zigzag is a three-wave structure. It's like this: A, B, C. Okay, so that's a three-wave structure. It's a 5-3-5 structure. What does that mean? That's the that's bullet number 2. It says it's a 5-3-5 structure. So if it is a 5-3-5 structure, it is an ABC structure. Let's label it first. A, B, C. Actually, we're not following the right sequence. Let's first identify, like I said in the beginning, the important thing here is to identify the structures first. 1, 2, 3, 4, 5. So that's 5 in A, 1, 2, 3 in B, 1, 2, 3, 4, 5 in C. That's why it is a 5-3-5 structure. So now if it's a 5-3-5 structure, you can label it as A, B, and C. How do we label this? Label it as 1, 2, 3, 4, 5. 1, 2, 3, 4, and a 5. Here it's A, B, C. C is 1, 2, 3, 4, 5 as well. That is a zigzag. A, B, C. Now let's continue. Wave B never moves beyond the start of wave A. That is the rule. This is the start of wave A. So this wave B can never move, should never be, in a zigzag, can never move to the start of wave A. So if it gets there, then that is not a valid B. Okay? Wave B is subdivided into 3 wave patterns: zigzag, flat, triangle, or any combination thereof. So this wave B can be any of the corrective structures that we are going to discuss tonight. It can be a zigzag that we're looking at also. It can also be a flat. We have not discussed the flat yet, or a triangle we haven't discussed as yet. So it can be any corrective structure. Wave A can be either an impulsive wave or a leading diagonal. So as we've learned that you can also get a diagonal in wave, a leading diagonal in wave A. So this wave A can also be a diagonal instead of an impulse. Okay, so wave A can also be a diagonal. All right, so let's carry on with the rest of the rules. So it can be an impulsive wave or a diagonal. Wave C can also subdivide into 5 wave structures, a diagonal or an impulse wave. So the same with wave A, this one can be an ending diagonal. Remember, an ending diagonal, you find it in wave 5 and in wave C. So this can also be an ending diagonal or just an impulse. Remember, the leading diagonal, you find it in wave 1 and in wave A. So you can find it in that structure like that. Wave A and C are connected. They're connected by B, and they are usually parallel. That is a guideline. They don't have to be parallel. You can get a zigzag that looks something like this. You can get a zigzag that looks like this, so that is still okay. But they are mostly, almost always parallel. Doesn't mean that if you get one that is not exactly parallel, you disqualify it. It will still be valid. Okay, so that is ABC. Let's carry on with the rest of the rules. Waves A and C connected, usually in parallel to the line connecting the origin of the zigzag to point B. So B wave connects A and C. Wave A and C are more subdivided into an impulsive wave. We already discussed that. Wave C is always ends beyond wave A. So in a zigzag, your wave C must end below the wave A here. So this wave C must end below wave A. Okay, so those are the rules of a diagonal, but we're not done. We're not done. Still looking at the number of rules for a diagonal. So now I'm going to give you the Fibonacci levels. They are not on the notes. You can make your own notes for the A, B, and the C. So let's start with A. So your A again will be like your XA in a harmonic pattern. So there are no specific requirements or specific Fibonacci rules for an A. However, for a B, your B will typically retrace. Wave B typically retraces about 50 to 61% of wave A. 618% of wave A. Okay? So wave B must be less than 90% retracement of A. I'm going to show you what I mean by that. So those are the two levels for a B. So two things here on a zigzag. Let me draw a sketch to explain. If you've got an A, B, C like that, this wave B should not go above 90%. And there's a reason why. We want to look at why it should not go above 90%. This is A, this is B, this is C. Now, this B should not go above 90%, and this is a guideline that we use, and we'll show you why we're applying that guideline. Let's switch on here, put in 90% as well. Let's get 90%, there it is. This is a guideline, so this is 90% here. You see there where I've marked it already. Now, if it goes above 90%, the reason why we don't want it to go above 90% is that this will no longer be a zigzag but a flat correction, because it's not going to go sideways. So that's why we say wave B should not go above 90%. If it goes above 90%, then we are no longer looking at a diagonal, but rather a flat correction. Okay, so that is why I say B should be less than the 90% retracement of A. So it can retrace up to 88, 78 and still do something like this. Then we can still accept that as a zigzag. But once it goes above 90%, then the structure becomes completely different. You can see that this is not a zigzag, it's almost like a flat correction. So those are the two Fibonacci levels for a B. And obviously B must not touch the origin of 0 of the start of wave A, because then that will not be a zigzag, but rather be a different structure. Okay. Now, what about C? We have to look at the levels for a C as well. There's something on the chat box. Let me read. So A and B must be 5 waves. Yes, A and B must be 5 waves if it is an ABC zigzag. We're still gonna do WXY zigzags, which is gonna be something different. That we're gonna do on Monday. But tonight we're going to cover them as individual corrections. All right, so let's look at C. How far must C go? How far must C go? Now here are the rules for a C. Your C should be anywhere between 61.8 and 1,618 extension of A to B. What do I mean by that? If this is your zigzag, this is your A, this is your B. Your C, obviously we already know that it must be below A. It must be, you take the Fibonacci extension tool, take it from the start of A to the end of A, back to C. Now, not C, right, it's B, back to B. Now, your C should be anywhere between 61, this is your 61. You can have a zigzag that looks like this with a short C like that, because anywhere from 61 to 1,618, that zigzag is valid. So you can also have a zigzag that has got a long leg like this. Why do I keep writing C there? This is a B. So you can have a C there. You can also have this being a C at 100%. This is the typical one. The 100% is usually at the 100%, but it can go beyond the 100% sometimes and up to the 61. Once it goes below the 61.8, then you start disqualifying your count as a zigzag. Now, let's put this one on here as the levels for a wave C. So wave C should be anywhere between 61 to, not 61, 61.8 to 61.8 to 1,618. I should actually do it like this. 0,618. Of A. Okay, so those are the levels for a wave C. Now, why is it, okay, here's a question. What are the ways we make sure that wave B is ended? Unfortunately, you will wait for signs of reversal, maybe divergence or anything that you'll find towards the end and the rest of the structure as well. Now, typically, once it gets to 100%, you're gonna start expecting reversal because those are the levels. That's how you're gonna know it's ending. Anywhere between these levels, then you'll be expecting that you're gonna get a reversal. And remember, you don't pick bottoms or tops. Just because we know the Fibonacci level is going to be there, you still wait for this to reverse and give you a correction, and then you start. Then you can then ride onto the trend. Those are the levels. That's how you will know that it has ended. Looking at the Fibonacci levels. Now, I wanted to show you why we disqualify or invalidate at 1,618. This is the reason why we put this guideline. If this goes below the 1,618, then this is no longer an ABC structure, but rather a 1, a 2, with an extended wave 3. Remember, wave 3 goes above 1,618 and it becomes an extension. That is why we say it will be a wave 3 and not an ABC. And unfortunately, you will only know once this starts breaking below the 1,618. So this is the reason why we want a confirmed wave 3 to be below or above the 1,618, depending on whether it's bearish or bullish. We want to confirm that it is not a correction. If it goes beyond or above the 1,618, we know that this wave C is not going to be an ABC structure, because then it can be an ABC structure and continue higher. But once it goes below the 1,618, we know that it has to get a 4 and a 5. Okay, so that's how we look at that. And those are the rules of a zigzag. Everybody clear? All right, so let's look at another one. We're going to look at a flat correction. Let's look at a flat correction. Now we're going to look at 3 variations of flat corrections. The first one is going to be the regular flat. Let's start with the regular flat. We're going to plot it right here. So a flat correction looks something like this and something like this. Okay, so now when you look at this, can you see the difference between this and this? This is a regular flat, it goes sideways. This is a zigzag, it opposes the move. That is the difference, and that is the reason why this is called a flat in the first place, because it is flat relative to the swing. If this is your swing and this is a correction, this is flat relative to the swing. This one opposes the move, opposes the swing. So that is the difference between the two corrective structures. Right, so now let's read the rules of a flat. Let's remove that. Now let's read the rules of a flat. Go back to the notes. Slide number 19. Now it says here, flats are always three-wave structures. I've already drawn the three-wave structures. Wave A is a three-wave pattern and never a triangle. Now here is something strange that we've not seen before. They're saying there, bullet number 2, wave A, let's label it. This is your wave ABC on a flat correction. It's a three-wave structure, ABC. What we've learned up to this point is that wave A will always have 5 waves. Remember from yesterday, we said wave A is either 5 waves of an impulse or 5 waves of a diagonal. The same way we've done it here. But now with a flat correction, they're saying it's something totally different. They're saying now an A has got 3 waves. Now, how does that work? You've got a wave A that has got 3 waves. That is on a flat correction. And that is the only place where you are going to find an A wave that has got 3 waves. Now, B will always be 3 waves regardless of the structure. B will always be 3 waves. That's okay. Let's go to bullet number 4. Wave A retraces to at least 90% of wave A. Now, this is now the opposite of what we said here. We are saying that B must be greater than 90% retracement of A. Why? Because if it is less than 90%, it's going to be a zigzag. So it's the opposite. So we want B to be greater than 90%. So if we take the Fibonacci level from Fibonacci tool from the start of A to the end of A, your B should be at least above this one here, so that it can be flat, because if it's below here, it can still be a zigzag. Okay, it can still be a zigzag like that. Now, this is a guideline. We're saying B must be greater than 90% retracement of A. Okay, and that's the Fibonacci level of a B. Now, A will still be like your XA on a harmonic pattern, no specific requirements for it. Okay. Now, let's look at the next one, wave C. Wave C always subdivides into 5 wave structures, a diagonal or a impulsive wave, same as here. Wave C in all patterns, whether it is a zigzag, the 3 flat corrections, it will always be 5 waves. You'll never find a wave C that has got 3 waves, but the only one that you're gonna have with 3 waves is A on a single flat correction. Now let's put on the 5 waves for a C here, because they're saying that a C will have 5 waves, 1, 2, 3. Whether this is an impulsive wave or a diagonal, it can be either. It can be a diagonal or it can be a 5-wave move, 5-wave impulse. How do we label this? Now, internally here, we're going to label this as ABC lower degree. ABC. And 1, 2, 3, 4, and a 5. Okay. Now, waves A and C are connected. They're connected by B. And they're usually in parallel, not exactly, it does not have to be parallel, it's a guideline. And wave A and C are usually equal in length. Then the last bullet, look at the last bullet, says, wave C always ends around the end of wave A. Now, they are not giving us a specific Fibonacci level here. So wave A just ends at around A. Ends around A, that's it. We don't have any other levels for a C except it must just be around the area where wave A ends. So if it is slightly above here, slightly below here, we will accept it because it's a guideline. There's no specific rule for it. But has 3 waves in A, can be a ZZ. What do you mean a ZZ, John? A ZZ, what do you mean by ZZ? Oh, zigzag, yes, can be a zigzag. Yes, the three waves in A can be a zigzag. So if you had to go lower, then your wave A, B, C here will be 1, 2, 3, 4, 5 there, 8, 2, 3 there, 1, 2, 3, 4, 5 there. Okay, so that is possible. If that's what you mean, John. Okay, excellent. Now that is a regular flat, and that's how the flats behave in general. Okay. Okay, so now let's look at a expanding flat. Let's look at an expanding flat. Again, let's construct the expanding flat. Now that is on slide 21. An expanding flat will look something like this. You are still going to have a three-wave move, A, B. Now this one is going to push higher. It's going to break above A, and it's going to break below C. What does this make? It gives us, let me just delete here so we can clean it up a bit. That is a C on a regular flat. Now this is an expanding flat. Can you see the difference with an expanding flat? It is still a flat. It is still a flat correction like that. Let me read the question here before I proceed. Does it qualify when it retraces 100%? Yes, if you're referring to the regular flat, yes, this one, it can go above, must go above 90%, and even if it touches here, we still accept it as a regular flat, even if it just moves slightly above here, because your wave B, as much as we want it to go above 90%, Elliot just said B must be around the area of wave A, and C must be around the area of the end of wave A. That's all. You don't have specific Fibonacci levels from the wave theory on a regular flat, or on a regular flat. Okay, so let's take this one off, the Fibonacci levels. Okay, so that is your expanding flat. So the structure of an expanding flat, reading on bullet number 2, is also a 3-3-5. So that means, again, you're gonna have 3 waves in A, 3 waves in B, and 5 in C. A, B, C, A, B, and C, then 1, 2, 3, 4, and 5. Okay, so what is it now? It is an ABC structure. Okay, ABC structure. The difference between the regular flat and the expanding flat is that the regular flat breaks above the start of wave A and breaks below the end of wave A. Let me see if there's a question in the chat box. Okay, good. So if you wanted to label this, this will be A, B, C in red. A, B, C. A, B, and C. 1, 2, 3, 4, and 5. Okay, clear. Now, what about the levels? Wave A does not have any specific requirements to be a part of a flat correction or any other correction. So we don't have any specific levels. It will depend on the overall structure, how far A goes. As for B, it must be between 105. Let's do this in purple. B must be between 105 to 138. 105 to 138 retracement of A. What does this mean? It means if you take a Fibonacci retracement tool, you take it from the start of A, excuse me, to the end of A, your B, let's switch it on. We want that 105 and 138. Where is 105? 138 we've got. Now we need 105. There it is. Now I've got all the levels. Now your wave B should be above 105 and should not go above 135. It can be within that range, and this is a guideline. Okay, let's remove those levels. You saw how we got those. Take it off. Your B, you'll find it anywhere between 105 and 138 retracement of A. Now, what about C? C must just not be maximum length of wave C is 1,618 extension of A. I'll show you how to do that with the fib tool now. So your C must be a maximum of 1,618. It must be below A and a maximum of 1,618. How do we check the C for a expanding flat? You take the extension tool from the start of A to the end of A back to B. Your B ends here now. So your C must not end below the 1,618. Your C should not end below the 1,618. And that is the level for the wave C, and that is A expanding flat. See, I'm giving you all the levels and all the Fibonacci levels. All right, so now lastly on flat corrections, you get a running flat. Let's project a running flat now. So now a running flat will look something like this. Again, another 3 waves, A, B, it breaks the top, but does not break the low. That is your running flat. Let's remove this. Now again, a running flat, like all the other flat corrections, they all have 3-3-5 structure. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4, 5. Impulse or an ending diagonal. A, B, C, A, B, C, A, B, not A, B, C. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Whether it's an impulse or a diagonal. If it's a diagonal, remember the rules, your wave 4 must be within the territory of 2 for it to be a valid diagonal. Now this is an ABC structure. I hope I'm explaining this clearly and you're not getting confused. ABC. All right. Now let's look at the levels. Again, A will not have any specific requirements for it, but your B will be exactly the same as that on expanding flat. So your B will also be 105 to 138. 105 to 138. Like this. Okay. What about C? Now this is where a running flat becomes tricky. You don't have any Fibonacci levels given in the wave theory for a C to project the end of wave C. So what we typically do is assume that wave C will be equal in length as wave A, so you take that and project that to be your wave C. Just project equal length. That is as close as possible to getting where how far your wave C is going to end. Otherwise, we don't have specific Fibonacci levels for that. Okay, we're still together so far. So it's 1, 2, 3, 4 types of corrections that we've covered, and we have got 5 of them in total. Now, what is missing here is the last one, which is going to be a triangle. Now, a triangle let's project, let's go to the triangle slide. Dowd is asking, when will you determine a flat will become a running flat? There's no way of telling whether if it's going to be a running flat, unfortunately. You can't tell if it's going to be a running flat. But there are a number of other things that we look at to forecast reversal of a pattern. Okay. Right, so now let's look at the triangle, if Dowd is satisfied with the answer. Let's look at a triangle. Let's go to the notes. Let me check. Slide number 23, we'll be reading the rules of a triangle there. Now, there are 3 different types of a triangle, and they all have the same structure, but the external structure is the only difference. Otherwise, the rest of the rules are applied the same. So we've got a contracting triangle. Let's draw its boundaries. We've got a contracting triangle. You've got a triangle with a flat top and an ascending bottom. You've got a triangle with a descending top and a flat bottom. All of these are valid triangles. Now, a triangle, let's read the rules now. In a triangle, the waves always subdivide into 5 waves. So you're going to have 5 waves in a triangle. Let's do the 5 waves. It's going to be A, B, C, D, E. Remember, it's a correction, so you label it in letters. In a diagonal, you are labeling 1, 2, 3, 4, 5 because it's a motive wave. This is a correction, so you label it with letters. So it's A, B, C, D, and then E. And the triangle is complete. So let's label it. I should have done it in yellow. Let's do it in yellow so you can relate it to the other degrees. A, B, C, D, and E. Now, even in a triangle with a flat top and an ascending bottom, it will be the same. It will be A, B, C, D, E. Exactly the same. Nothing changes there. Same with the one with a flat bottom. It will still be A, B, C, D, and E. Okay? Now let's read further. Wave A never goes beyond the origin of X. Okay, so wave A, if this is the start of your swing, let's put it in here. If this is your swing here, if this is your swing, this wave A obviously can never go, should never go to the start of this swing. That is obvious. Let's label all of this. A, B, C, D, E. A, B, C, D, E. The same. A, B, C, D, E. That's your E there. Okay, now let's read further. The structure of a triangle is 3, 3, 3, 3. So that means on a triangle, all of the waves A, B, C, D, E will subdivide into 3 waves. So let's show that in red. This is the reason why I was putting that in yellow. So we can have the red degree here as the next one. So you're gonna have 3 waves in A, you're gonna have 3 waves in B, 3 waves in C, 3 waves in, 3 waves in C, in D, 3 waves in E. Similarly, A, B, C, and all these internals are labeled ABC. You label them ABC internally within these structures. So it doesn't matter whether it's a triangle with a flat top or an ascending bottom, or a descending top and a flat bottom. It doesn't really matter. It doesn't matter at all. So the structure will be the same for all of them. Now, what is the difference between a triangle and a diagonal? A diagonal is a motive wave. A triangle is a correction. And another significant difference is that your diagonal will have a certain direction. It will be going in with the trend. Your triangle goes flat. Guys, make sure, don't label triangles that are ascending as A, B, C, D, E. Your triangle is like a flat correction. It's like a 5-way flat correction. Okay, so I found people labeling diagonals A, B, C, or triangles 1, 2, 3, 4, 5. That would be incorrect. So a triangle is flat relative to the swing. Okay, let's read further. One of the 5 waves can subdivide into an impulse. So within this triangle, you can allow, it is allowed for one of the waves to be impulsive. It does not have to be there, but if you found one impulsive wave within a triangle, you can accept that as a triangle. But if it is more than one impulsive wave, then you disqualify the triangle. And it's no longer a triangle. Okay, that's that rule on bullet number 7. So let's go to the next one. In a contracting triangle, wave C never goes beyond the wave A. This is common sense, guys. If this is wave C, it cannot come and touch wave A. It cannot come and touch wave A in a contracting triangle. That will not make any sense. It will not be a triangle now anymore. Then it will be maybe a flat, rather be a flat or something else. Wave B may go beyond the start of wave A. It is not common and it is called a running triangle. I'm going to show you a running triangle as well. Let me show you the construction of the running triangle. But before that, let's complete the rest of the rules for these triangles and then we'll do the running triangle as well. A wave 5 following a triangle can either be sharp, short, and brief, or turn into an extended wave 5. Now, similarly with diagonals, your wave E can overshoot. Okay? It can overshoot and then do this. It can overshoot and then do this. It can overshoot and then do this. That is possible on a triangle. It can also undershoot, become short and then go. Become short and then go. That's all. That also happens within a triangle. It can also do this and then go. Okay, so all of that can happen in triangles. All right, so those are triangles. Now let's go back to that bullet number 3 from the bottom where it says wave B may go beyond the start of wave A and it can be called a running triangle. Let's show you a running triangle, and a lot of people don't even look at this type of a triangle. It is not common, but it does exist and we have traded it before. Now a running triangle will be something like this. I should have made space for it, but that's still fine. We'll have it there. In a running triangle, this is what happens. You will have this string coming here like that. That is what it looks like there. And then you start, the triangle starts with A, B, B goes beyond the end of the string. B goes beyond the end of the string. Similar to this, similar to the running flat. And then it comes back like that. Let's do it. Let's then draw it clearly. So your running triangle will look like this. This is going to be your lower boundary and your top boundary. That is your triangle. Do you see the difference? Is that this one, this triangle, the B wave goes above this last the end of the string. A, B, C, D, E. All right, so now you're gonna have here 1, 2, 3 again. Same thing. 1, 2, 3 in B, 1, 2, 3 in C, 1, 2, 3 in D, 1, 2, 3 in E. Now, internals of this, you label them ABC, guys. ABC, they're all labeled ABC. ABC, ABC, A, B, C, A, B, C. Okay, so those are the 5 corrective structures. Those are the 5 corrective structures, and if you understand them properly, you understand their Fibonacci rules. This screen, as I have it, you can take a screenshot of this and use this as a cheat sheet. Okay, a so-called cheat sheet. You can always refer to this for all the levels until you're comfortable with this. Now, what is happening here? These are corrections. When do corrections come? The corrections come after a swing. So you will have a swing coming from a zigzag here. You get a correction. After the correction, you expect the swing to continue like this. The same way with a regular flat, you will have a swing coming here like this. After the regular flat correction, you expect the swing to continue. Similarly, with an expanding flat, the swing comes, you get correction, and the swing continues like that. With a running flat, the same, the same, the same. With a triangle, the same move to the upside, correction with a triangle. After that, the move continues. So it is always a move, correction, and then a move. Same with a running triangle, a move, correction, and then a move. Okay, I'm obviously out of space here, so with the one with a flat bottom will be like this as well. These are all the correction structures, guys. So you can see now the pattern with the wave theory. This is how wave theory works. You are always going to have a move, a correction, and then a move. And this is the basic principle of the wave theory. And once you understand this, you are almost there. Okay, so let's say move, a correction, and a move. Okay, is that clear so far? Is this clear so far? Any questions with the levels? These are only the 5 corrections, and I'm saying 5 because the triangle is 1 correction. It's just the variations in terms of the outer structure. Okay, so I'm going to clear this. Yes, this looks easy, correct, when I'm doing it. And obviously, I'm doing this from ideal conditions with schematics, with lines. When you go to a chart, it's a totally different story. You need to have the eye and the experience. And obviously, to get that, you need to spend a lot of time with the charts. That is saying in a running flare triangle, what if A, C, E break the bottom? If A, C, and E break the bottom, then it's not going to be a triangle. And remember, when we say a triangle, when you go to a chart and you find something like this, do not force the lines like that. If you're cutting through here, that is not a triangle. The triangle must fit almost inch perfect. Okay? Almost inch perfect. That's how your triangle must fit. And if it is a channel, then don't force it to be a triangle. If it is straight like that, don't force it to be a triangle. Then it is a different structure and not a triangle. Okay, I'm going to clear this, all of this. So we've learned the principle. It's always going to be a pulsing move and a correction. Now let's make this scenario here. So we've got a move up here. We've got a zigzag A, B, and C. So with what we have learned so far, what do we expect? We expect that this move continues to the upside. Okay. But instead, what if that move does not continue and you get something like this? 1, 2, 3. Now you had A, B, C here. And instead of getting this one to continue higher, you get these 3 waves. And these 3 waves are in the same degree as the first correction like this. Now it becomes messy. You've just learned the wave theory, you've learned corrective structures nicely with their Fibonacci levels. You go to a chart and then you see something like this. And now you get confused. And then instead of making them move to the upside, you get something like this. Another ABC structure. Now, what do you do in a case like this? Because your correction, a correction is supposed to be opposing the trend. This is our trend, it's going up. This correction is fine, it's opposing the trend. But this is in the same size direction as the trend. So it cannot be a correction, it's not correcting this. Now this one is fine, it's opposing the trend. Okay, so how do we handle this? This is how we handle it. Now what you are seeing here is 2 corrections combined with another one. So you have the first correction that is a ABC, it is a zigzag. You've learned about the zigzag so far. So this first correction will be represented by a zigzag. And this W is representing the whole correction. Now this one zigzag here, the one that we said is in the same direction of the trend, we are always going to label it as X. If you find a corrective structure that is in the same direction as the swing, you label it as X. Now this one is fine, it's opposing the trend, so we'll call this one AY. So 2 corrections in combination. You've got a zigzag combined with a zigzag by a zigzag for this specific example. Is this difficult, guys? Is it difficult to understand WXY? It's just 2 corrections combined. It's a double correction. Double correction. I want you to understand the principle. I know when we go to the practical, it's going to be a bit challenging than this, but if you understand this, it should be fairly straightforward when you go to a chart. Right, so yes, now you have got the double corrections. We've learned about the double correction. You will expect that after a double XY, you get the move all the way to the upside, right? But instead, again, it doesn't go, and instead you get something like this. You get another A, B, C zigzag, and another move that looks like this. And now you've just completely gotten confused. So now this is going to be A, B, C, and this is also going to be an A, B, C. You wanted this one to go from there. It didn't. Instead, it makes another one like that and another one like this. How do we handle this one now? So this is how you handle it. It's going to be a WXY X, because this is another combination now. And your Z is this regular flat. Can you see that's a regular flat? This ABC is a regular flat. So this is going to be your Z. So what you have here is 3 corrections in parallel, in combination. What you have here is the first correction, which is a zigzag, the second correction also a zigzag, and the third correction also not a zigzag, but rather a regular flat. And all of them are combined with connectors, and the connectors, we label them as X. Is there anyone who's got any challenge up to this stage? Or is it straightforward? That's how you look at the double. The double is a double XY, and the triple 3 is a WXYXZ. Now guys, if you get WXYXZ, there's not gonna be any confusion. It should make sense now before you go to the chart, Mpo. It must make sense now. If there's somewhere where you're not clear, you must let me know. Because when you get to the charts, it's gonna be more complex than this. So now there's a question from Mahmoud. Can it go more? Fortunately, once you get to a Z, you cannot get any other connector. Then you're gonna have an almost guaranteed trade. You're gonna get this move to the upside. So we like to call this the 10 lot size trade after the Z, because you know for sure that you're not gonna get any another move after the Z. Okay. So when you get a double XY XZ, very confident trade, you can easily trade it and then upside. Now this asking about how do you explain the fib levels. We're gonna do the fib levels for this on Monday when we do the strategy. So when we do the strategy, because this is what I'm gonna show you how to trade this. I'm gonna show you how to trade this and which Fibonacci levels to look at, and that's the Monday. That's the Monday course. No, Z. No, now there's a question: is Z always a regular flat? No. Z can be any corrective structure. Even this here, even this W can be a flat, you can have a combination of a flat, and a flat. A zigzag, flat, and a triangle. Any of the corrective structures, you can have them as combinations here. Now, here is what you need to make note of, and this is very important. Okay? This is very important. Make note. Your triangle, you cannot find a triangle here within the Y if you've got a double XY XZ. This corrective structure here cannot be a triangle. The triangle in a double XY XZ can only be in a Z, so that means it can only be the last corrective structure, not in the middle. So you'll have something like this, A, B, C, D, E. You can have this, that's fine. But you cannot have this triangle inside here on a Y or on a W. It can only be on a Z. So let me get the annotation right here and draw the triangle. A, B, C, D, E, that's our triangle. Then you'll expect the move to the upside. So draw the boundaries. That's your triangle. That's your triangle. That is A, B, C. I didn't draw it clearly, it should be there. D, E. Yes, you can have it like that. You can have that, and the move can then continue to the upside. Which move is this? This move is this one. The original move. You are looking for a trade that's going to be the same size as this after the Z. Now your Z here is going to be here because it's going to be representing the triangle. So the whole triangle is a Z. The whole triangle is a Z. And then you get a move to the upside. Now if it is only double XY, it's fine. You can have a triangle on a Y if it is only double XY. But even on a double XY, you cannot have a triangle on a W. You can have it here on a Y. Your Y can be a triangle. So your triangle can be there. Otherwise, for anything else, for all other corrections, you can have them anyway. The triangle is the only tricky one. It only requires to be at the end of the correction. It can only be at the end of the correction. So you can have that one on a Y like that, whether it's a running flat or a normal triangle, doesn't matter. Then you'll have this as a Z as a Y. So this will be your Y here, representing the whole triangle, and you'll expect the move to go like that. Okay. Even in the lower degree, yes. In all degrees, it's exactly the same. All right, so that is a triangle. So even if you've got lower degrees, now let's just run through this and look what the degrees are going to be. If you've got subdivisions here within the A, this is how it will look like. You would have 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5. What will it be like here? It's going to be 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5 within a C. Now here within the triangle, what are you going to have? You're going to have A, B, C. A, B, C. A, B, C. And this is how you relate the degrees, guys. 1, 2, 3. And then this goes all the way to the upside after that. So you can see that this red degree goes all the way from the start of the correction all the way to the end. And this is how you look at these structures. Okay, it is difficult. I want it to sink in with schematics before we start looking at example. And the second half of tonight's course, we're just going to be looking at the examples. Let's see what you have there, Dowdy. So in a WXY, if a triangle happened in Y, it is justification that it is an end of correction. Spot on. Spot on. So if you get a triangle on a WXY, and this is supposed to be a Y, by the way. If you get a triangle when you're looking at a double corrections, that's telling you that, yeah, you are not going to get another correction or anything like that. That is telling you that this is the end of the move and the swing should then continue to the upside. All right. Here's a question from Junior. When do you confirm that the structure is going to be a WXY rather than a WXYXZ? We'll cover that on Monday. We'll cover that on Monday. Difference between WXY, WXYXZ, that we're going to cover on Monday. I'm open for questions now, guys. Put up your questions so we can look at them. The next half is going to be, we're going to be looking at some practical examples. Today's not going to be as long as the first 3 days. If we are done with tonight's work, we're just going to be looking now at the practicals. So there are no questions. I'm guessing that everyone is happy. Everyone is happy. All right. So if everyone is happy, let's look at an example before we take a break. Let's look at an example of a WXYZ of corrective structures. So let's pick up, let's get off screen. Let's take any chart here. So when you have seen now all these structures, all you do when you look at the chart, when you open the chart, I'm going to remove this. When you open a chart, I'm going to do an exercise here. When I mark the chart, you just tell me which type of correction that is. Then I want you to type as fast as possible. So I've just opened here the DAX. Now I'm going to identify this correction. Tell me which corrective structure this is. Anyone? I want 20 answers. We've got 20 people in the room. John says a running flat. Can't be a running flat, John, because it breaks the top and breaks the low. So that is an expanding flat. Okay. All right. So I'm going to identify another one. Now tell me which one this is. Savelo says regular. Gary says running flat. If you say a regular flat and somebody says a running flat, you'll both be correct. Because this one breaks the low here, but it almost like all the same level. So you can look at it as a regular flat or a running flat, all the same. Okay, so let's look for more. So this is the exercise that you need to do for tomorrow. Go and identify these corrective structures. What about let's look for another chart here. Now, what about this one? It's identified in yellow. You tell me which one it is. This one. Which corrective structure is that? Expanding flat, not a zigzag, okay? Good. Now that is the exercise that you need to do. Every time you open a chart, you are looking for these structures. You're either looking for a corrective structure or an impulse or all three-wave structures. What about this? You see that? What is this here? What do you see there? Zigzag. And that's how you look at it. Okay, guys, so as I said, today we're going to take a 20-minute break. A 20-minute break. We'll be back at, it's 1:15 now, so we'll be back at 35. Let's make it 20 before the next hour. 20 minutes before the next hour. We'll see you in a bit, guys. We'll be doing practicals. Recording will be available in the morning, I guess, as you've been getting it. Okay, welcome back, guys. So as I said, we're going to be looking at some practicals. But basically what I want to do for the next few minutes is just to show you an example of what a WXY or a XY structure looks like. Okay, so let's have a look here. I want to look at an example. I like to look at this example because it's one of the best trades that we've ever taken using WXY structure. So we're going to look at US dollar CAD. Let's look at US dollar CAD. On the daily. Can all the people that are online say, yes, I see Junior is on and Sabelo is on. I just want to get an understanding of who's still on here. Okay, so let's have a look at this one, US dollar CAD. When you look at a chart, look at this here. I'm going to cut this chart out. Let's do a bar replay here and cut this chart out here. Okay, so when you look at this, you're looking at a impulsive wave from here. See this? Then you're seeing this correction. And now what we have done so far with tonight's session, thank you, Dowd, and I really appreciate you staying on. So you've got this impulsive wave and you've got this correction. Now, what we do here is to try and understand the corrective structure here. This is our corrective structure. And it looks very complex, but if you get it right and you understand the end of this correction, then you know that you're gonna get this. It starts with this, there's a correction, and you want this to continue lower. But you don't know how far this correction will go. For all we know, it can keep doing this, it can keep doing this, and even retest the top. But if you understand the cycle and the sequence of this, then you will be able to focus to the end and then be able to take the trade. Okay, so now that's what I want us to try and do now. So let's have a look at this. We've already done the impulsive wave. We can see we've got 1, 2, 3, 4, 5 there. That's a 1, that's a 2, that's a 3, that's a 4, that's a 5. Okay, after this, we're getting this correction. Don't mind if you don't understand the rest of the structure yet, because we are still going to do this from historical data all the way to the lowest time frame. So basically labeling the whole chart. Now I'm just picking the last bit for the purpose of explanation and understanding the corrective structure. Now this is what I do, and somebody asked how long does it take before somebody can actually understand and be able to identify these structures? So what we did just before the break was I was picking up structures and asking you guys to tell me which ones they are. So like, for example, who can tell me this which structure this is? You can see that this is a three-wave structure here. What is this structure? 1, 2, 3 here. Somebody? What structure is that? Anybody? Come guys. What is that structure? Flat. Which type of flat? Doubt. It's a regular flat. Thank you. Right. So that is what you do when you look at the chart. But this time, you know now that you already have a impulse. Now you want to understand this structure. And you know that after this must go down. So let's go for it and look at the structure. What I see here, I see that there is a three-wave move here going like this. Now, what is that structure in yellow? What is that structure in yellow? Let's see if you understand. What is that structure in yellow? Zigzag, yes, that's right. It is a zigzag. So whatever you think it is, just mention it. Don't be afraid. If it's wrong, that's fine. We're still learning. So it's a zigzag. Now, what about this one in red? What about that structure in red? It's another zigzag. Now, I'm going to change color here and identify another structure here. Do you see this structure here? What is this one? That is a flat. That is a flat. Now, let's go to the yellow degree again. Do you see that here you've got 1, 2, 3? Okay, you've got 1, 2, 3 here. You've got 1, 2, 3. You agree? That's right, it's three waves there, but these three waves are much smaller than this one. Can you see that this is big? This is big compared to this one. This one is much smaller than this one. So this is telling you that this is one wave. It's a higher degree. There's a higher degree wave like this because the next wave must be the same size as this one. So it's going to be 1, 2, 3. Before I do the 3 here, can you see that you also have another 3 wave here? But it is much smaller than the first one. So instead of making it 3 waves, I'm going to represent it with 1. So eventually here I have 1, 2, 3, and this 1, 2, 3, can you see now that it is in the same size as this one? Okay, same size as that one. Now, next one is, I see this one coming down here in 3 waves. Okay, it's coming down in 3 waves. Now, when you look at this structure, this is what was happening when we were trading this in 2017. What was happening was the trend line traders were doing this. They were drawing a trend line there. And you can see that this trend line was perfect. When this trend line was broken here, some people sold. Obviously, you can see that it went back up and they lost the money. Okay, some who understand trend line better and have I wouldn't say better, have got a bit of a different strategy. When these broke down here and went back up here, they said it's retesting because they always say if you break, you retest and then you go. That's when you're trading support and resistance. That's what they were doing there. So they said, okay, it broke, it's retesting, and then it's gonna go. Some people sold here. And as we know that this has not gone down from there, we'll play the rest of the candles here. It did not play out like that. So just redo that. So what are we seeing here, guys, with what I've drawn? Remember, you identify the structure, name the pattern, understand its characteristics. We already know how a zigzag behaves. And in this case, we can see this is a zigzag. It's a W. It's a first correction in the structure. So I'm calling it a W because it is opposing the trend. You see here, the trend is down. This is opposing the trend. But I've got this 3 wave here that is in the same direction as the trend. What do I call those? I will label it as X. Now I've got another 3 waves in the opposite direction as the trend. Now those are like, so then that is a Y. Okay, so if I get a double XY, what am I expecting? I'm expecting that I'm gonna get a move from there that is gonna go all the way down. So that means when this was playing out at the top here, I was looking for this to do that. But as you can very well see, this made a move only up to this level and bounced up again. Okay, so we would have already been on break even. We would not go so many pips to the downside and go out on a loss. So you didn't lose that trade. But what we see then is that this is now going in this fashion. This is a corrective structure. Which corrective structure is that? Which corrective structure is that? Anybody? It's a flat, but which flat correction? A regular flat, right? Because this just touches there and just touches there. Excellent. Now this will be an X. So if you get, and why are we saying this is an X? If we have a double XY there, why are we not saying this is going to go down? That is because this did not make any impulse. If it had made an impulse down like this, then after a correction, we were going to expect this to go. But the reason why I said to everybody who was trading this pattern at the time that it is going to make a move up first before it goes was because it made a three-wave structure. It's a corrective structure. After a corrective structure, there must be a continuation pattern. Whether this is going to be a flat correction, whether this is going to be a zigzag to give us a Z, there had to be a corrective structure before they move down. So that's why when this happened, I was looking to trade this to the upside. I was looking for an entry here, and then let's play this and see how this played out eventually. So if I'm labeling this as WXY, I'm expecting that we're gonna have a Z there because I've got WX and then a Z there. So let's play this, the rest of the candles. Let's play them and see how this plays out. Let's make it a bit faster. Let's pause. Okay, so what happened here? See what happened here? I've played it. What did I say? We were looking to buy it here. Why? Because it made a three-wave structure. After a three-wave structure, this move to the upside must continue, correction, and continuation. It made another correction, and I saw continuation. We actually traded this 600 pips to the upside. Okay, exited this one at the 61% of this, 600 pips. Now, what you see there, now I was looking for this to give me because it's a single move to the upside. It had to give me three waves. So I was still not convinced that we're gonna go down as yet. So this made this move here, let's use the green color here because it's in the lower degree. It made a move like this, corrective structure here. After this corrective structure, it made a last move of the Z, which we also traded to the upside. Let's play it. Let's see how this one played out. Play. You see what happened there? Exactly what I've shown you. Obviously, I've seen it before, but we did not trade this in hindsight. Let's pause. Okay. So that is what happened when everybody was trying to sell this. We bought these 600 pips. It corrected here. And we bought the continuation here, another 600 pips. So that meant 600 pips we bought and another 600 pips. And after that, right at this tip, because we know, a zigzag, where we said a zigzag will typically be at equal legs. So if you had A and you had B here, you would expect your C to be at a point where it's exactly equals to A. And in this case, we had projected a blue box that it was going to reverse here and not a peep higher, not a peep lower. This reversed, tagged here, and went for 1,200 pips. Can you see that in just this last correction to the upside and this last move, 2,400 pips total. 2,400 pips total. Okay. All right, so now somebody can say, as I'm explaining here, Oh yeah, but it's easy. You're seeing it as having already happened. No, when we traded this was before it happened. This move to the downside, I saw before, way before it happened, and I'm going to show you now. Okay, 1, 2, 3 up, and then move to the downside. Now, let me show you how we traded it live. So this was the Z, and then it moved to the downside. Let's see if I can find it quickly. How we traded it in 2017. I keep my snaps, so we'll find this one. So let's see here. So you can see that we identified before it happened, not in hindsight. Let's go back to trading snippers. Let's get used to like it. Okay, so this is way before it happened. Here's the image, because it's easy with the way I'm explaining it if you've seen the pattern. But this is when we're trying to buy the 600 pips. You see, that's where we targeted we're gonna get. And right to the pip that played out, as I've shown you already, you've already seen how that played out. That correction then happened. We bought again for 600 pips. I don't trade the corrections, I trade the impulses. So we traded this one here to the upside and traded the 600 pip to the upside. Now look at this. Right here, that's where we got the reversal. Why? Because I projected that at equal legs it was going to reverse. Let me show you another image. This was sent to the group, the members in the group at the time. Let's make this a little bit bigger. Yes, to look at. I want you to see the projection of this. Yes. I want you to see that this is where we projected it was going to reverse. So this was that 600 pips. The 600 pips started here. We got that. It corrected there. Now, this is the last move to the upside. Can you see me focusing here that at 137.91, we're still going to have a push higher because I wanted these to be equals to this and to reverse in the blue box. So that is how that played out. In the next image, you will see that pushing higher as forecasted. That is how that is playing out. Can you see exactly where we said it was going to reverse? It just touches and then it reverses. That is the power of the blue box. For 1,200 pips, this just kept going. Okay? And eventually, this is how this has played out. Let me see if I've got the final one. I didn't do the final one. But in any case, so you can see how that has eventually played out. As you see, let's remove here. That playing out for 1,200 pips. 1,200 pips. This move. Right here, the tip. So even if you had missed it from the blue box, we've got a strategy to get entries and continuation patterns. So you would have entered there. You would have also entered there, and you would have gotten 1, 2, 3 opportunities to ride the trend. Even if you had entered in the third one, you would have gotten 800 pips at least on this pair. So the blue box is what we're going to be looking at with the strategy on Monday, Junior. Okay. So that is how you trade W, X, Y, or X, Z practically. So what I want you guys to do is to keep on, when you look at the chart, try to see, oh, okay, I see a correction here. I see another correction here. There's what type of correction it is. Is it? Give it names, understand what it is. See if it complies to the rules. Yes, another one here. There's so many of them. You keep looking at this. How do they link with each other? Are they making doubles? Are they making triples? So you keep looking for this, and that is how you learn. Here's another one. Here's a bigger one. Which one is this? Okay. So you see these corrective structures. Now here's this one here we've not done yet, is what we like to call a complex B correction. That's a 1, 2, and a 3 there. Can you see that? All right. Now, so that's what I want you guys to keep on doing and practicing. And for the homework on Monday, I want you to start labeling the impulses, the diagonals, the corrective structures. Then we're going to look at the strategy. Start that labeling. I know you're just going to be picking up from the charts out of the blue, you're just going to be picking the swings and start labeling them. That is not the process that we follow. You will start seeing the process from Tuesday. Okay, you'll start seeing the process from Tuesday. So do this. When you see the swing, label it, identify your corrections. Do this, and it's important for you to do this. Identify them and mark them like this. Okay, and you don't have to write it for me. I know which one it is, but if it is for yourself, just say it's a regular flat or it's a zigzag, so you can learn. Now look at this one. It's a zigzag. Can you see that it's a catalog of patterns? It's a catalog of patterns. But now identifying them is one thing. Now you need to understand now, what is the relationship between this pattern and the rest of the structure? Yes, you've got a zigzag here. What about the rest of the structure? How does it come in? What is that relationship? And that is what I wanted to cover with you guys tonight. And I thank you for your patience, for staying on. As I said, the call that I was taking is with one of the big international traders, and they want me to join forces with them, and that will really be an advantage for the rest of you that are already in my group. Thank you for your patience. Once again, I apologize for delay. So you will get the recording as soon as this one is processed. Thank you very much for joining me, guys. Are there any questions before I stop the recording? No questions. Thank you very much. I will see you guys tomorrow. No, on Monday. I'll see you guys on Monday. You didn't get yesterday's video? Oh, okay. I'll send it again just now. I'll send it again just now. I don't know why this keeps happening. In any case, cheers everybody.